Hey guys, today we'll be talking about stocks and maybe even crypto versus real estate. Which one is a better investment? So why are we talking about this today? Because recently I have one or two clients that have been, after you run through the numbers, they're like, hey, Titi, then based on these numbers that you give me, then I might as well put all my money into stocks. I mean, I have like maybe 500-600K, then I put into stocks. I get higher ROI, which I totally don't disagree. Yes, if you know how to pick your stocks, actually you do get much higher ROI than in real estate in Singapore. Okay, so but then again, there are certain risks and certain pros and cons of each vehicle. I'm not saying here, I'm not here trying to promote real estate, as in like, oh, real estate is the best vehicle for you, blah blah blah, that kind of thing. It really depends. If you are a real pro at stocks, then probably you'll be better off putting more money in your stocks. But if you're a noob or rather amateur like me, then probably yes, I would still want to put money in stocks, but I wouldn't want to put too much of my money in stocks because for the past 2-3 days, for those of you who watch the market, you notice for the past 2-3 trading days, our stocks have been performing very badly for the US side. Okay, so later I will show you in fact some part of my stocks portfolio to show you how shitty it is. Okay, recently. Anyway, let's proceed, and disclaimer, and anything I share today is just based on my own point of view and my own research, and doesn't represent any other people's input lah. Okay, so anyway, let's continue. So, as usual, I think by now we have seen this kind of memes, people cracking all kinds of jokes, Dogecoin going to the moon, Tesla to the moon, all kinds of things. We have seen certain vehicles such as certain stocks, certain crypto really running thousands percentage gains. That means basically 10 times, 20 times gains over the past 1 year plus 2 years since COVID started. Okay, and then the other thing is also at the end of the day, is real estate still going to be able to compare to the crypto side? Because this guy, after all, has been really outperforming the market lah. I mean, if you look at things from like maybe how much 5 years point of view, he's definitely had outperformed the real estate market in terms of percentage gains. Okay, but the thing, like I said, is also really depends on how much you put in, right? Okay, and then S&P 500, let's take a look. For those of you who look at the US market, if you really know how to time the market, and then you got it at the absolute peak, which I think only probably less than 1% of us are able to do that. I did try to do that. I bought somewhere along here and still went a little bit further in, and then I thought, maybe I thought it was good enough, but apparently no, I wasn't. So I ended up buying some more around here, which is not too bad because I do got some gains, or we gotten some gains over there. But me being the typical noob that I am in the stock market, I ended up picking some of the stocks that didn't perform as well. Okay, and then this is just a guideline. As of course, this is S&P 500 is akin to our PPI, the property price index for our private residential. And then these are some figures of Dogecoin. In fact, why did I put four of these? These two, this is Dogecoin, this is Bitcoin. Why? Because I actually pulled this out on 8, if I remember. Oh yeah, this is the US time. US time is a little bit further back behind. So 7th of May, I pulled this out. And then look at this guy over here, 0.18 SGD. And then Bitcoin, it was 49K SGD. So 2 days later, I just pulled this out like just now only. It has dropped to this. This is like almost 20% drop. If my maths is if my maths is not that bad. Then this is like maybe also about 10 plus 20% drop within a span of 2 days. Like, how many of us can stomach that kind of paper loss within 2 days? Can you imagine you put, or let's say two of my clients that I mentioned just now, or put 500K into Bitcoin, and then within 2 days you drop, let's say 20%, your 500K that you have saved so diligently for, within 2 days you dropped up to 400K. How many of us have the kind of conviction to keep holding? Okay, it is definitely not easy. And then you've seen that's the problem with this kind of vehicle lah. Yes, it can rise very fast, but how are we able to predict based on our knowledge, and or rather how are we able to manage our risk so that it doesn't fall that bad? And if it does fall that bad, are we able to stomach the kind of people loss? Okay, and then that was crypto. Now we look at the stocks. Okay, for those of you who has been following, Wall Street bets, and then you got the GameStop that went as high as $300 at last year, somewhere around June, almost 1 year back already. And then for those hero that bought those hero that really bought in at 300 and if they continue holding on, if let's say they put 500k now, they probably will be sitting maybe on maybe I don't know 150k. How many of us are able to take that lah? But ultimately you say, TT, I'm not so bad ma. Maybe I would have got in here, and then maybe I would have exited here. Maybe I would have exited here. That's what you think. For those of us who are not real pros in the market, in fact, we are starting to see quite a lot of hedge funds recently making billions and billions of dollars of loss. And those guys are supposed to be the real elite, real pros of Wall Street. But these guys are losing billions. So people like me, yes, I still dabble some money in stocks. In fact, it's not even that small. It's maybe like 6-figure kind of figures. But I wouldn't want to put into something. For me, my risk appetite is not that high. I'm not going to be putting into something that is extreme as this. Of course, if you know how to play GameStop, then by all means go and play lah. But it's not. I figure it's not something for the faith of heart like me lah. Yes, I did try day trading last time. Made a few couple of $1,000s, thought I was invincible, and then ended up losing almost all my capital. And that was one bad lesson that I learned. And then I realized that I wasn't able to manage my emotions that well, and hence I stopped day trading. Instead I went for something that is at least mid to long term. Okay, so this is GameStop. We've seen the performance like this, and this is AMC, the other Wall Street bet, meme stock, and then went up to about 60, and today is sitting at this. So imagine your 500k becomes 100k. Okay, of course, you also have the whole bunch of Tesla bulls. I have friends that literally threw like a whole big bulk percentage of their financial wealth into Tesla. Like, of course, they made a few times. If they throw it at the right time, they made a few times. But how many of us are able to throw it maybe here, maybe here? Maybe some of us, you see, wow, the past few months have been biting so high. You decided to get in here. And imagine you throw in maybe 60-70% of your wealth inside, and then today is sitting on here. Okay, so assuming this is like what, 1,000, 1,002, 1,001, and then today is sitting at maybe 700. How many are you able to stomach it? I think it's gonna cause a lot of uneasiness on your everyday lives because I've been through that. I've been through the stage where I bought a stock, and then typically when I buy a stock, I always tend to monitor it over the first few 2-3 days, and then I told myself, okay, I need to stop because this is not going to be healthy for me, because I'm not here to day trade. So what for am I what use is it going to be for me if I want to keep monitoring every single day Okay, so and then I find it's very distracting because I cannot do work, I cannot do any other thing. I just keep watching the stock market, and then I find nowadays my returns tend to be better if I monitor the market less. In fact, nowadays I only check the market maybe once or twice a week, and then sometimes when I do get tempted to sell, I do tell myself, I'm actually here for the mid to long term because I believe in the companies that I invest in. So I think for vast majority of us who are not that disciplined in terms of emotions, in terms of other methods of discipline, that I think it may be better for us to go for something that is more low risk and probably a longer term when it comes to the equities. Okay, and as for example, this is my own part part of my own portfolio. Of course, it's not all. Typically, I'm not sure how many of you will be seeing something like this. Or you probably got a couple of pretty good decent returns. All these, by the way, most of them were bought sometime between I think 2020 to and also 2021. And then this year I haven't bought anything new, if I remember correctly. Yeah, I haven't really made any move because I decided just stop my nonsense and then just observe the market. And from what I know, quite a few of my friends who really uh, struck it quite big for the past 1 year plus. From what I heard is this year they have been in the red and they are quite a bit in the red. And no prices were getting a lot. They are in stock and in the tech stock, playing the tech stocks, and hence probably why they are seeing a lot of red. For me, it's quite a lot of green, but of course the red can be quite red in some of these. So a typical amateur will be facing something like me. Maybe you get a couple of greens, you feel like you're invincible, but then you realize that oh man, I got quite some bad red stocks. And then I put this out on 8th of May. And then today is almost 10th of May already. And within 2 days, my typical portfolio gain from my entire thing, right, was about, if I remember correctly, was about plus 20% in about 1 year, which is not bad, right? I mean, it's better than CPF gains. It's better than probably most of the real estate gains. Okay. Or rather definitely higher than what your HDB will earn. But then this 20%, if I remember correctly, the last I checked just now before I did this, this overall 20% dropped to less than, I think less than 10% gain. So that's how bad it is within 2 days. And then of course I look at it as sian because 2 days and then I'm losing so much. But the thing is, when it comes to real estate, are we going to be facing this kind of a big drop in prices within a couple of days? Is there this kind of volatility around? Okay, so this is an example of my portfolio and probably the example of a typical amateur. Yeah, anyway, this is just a joke. Okay, so for those of you who play stocks, you probably get it. So the funny thing about stock market, right, I like this quote, is that when somebody buys and somebody sells, both of them, both sides will think that they're smart, which I think which is always like that. I've done stupid mistakes, definitely. I think all of us have before. I bought something that is low and then I sell it at quite a pretty good price, and I think that I'm a damn smart person. Then I only to see the stock continue going up. And then I realized, oh shit, man, I'm really pretty stupid in that sense. But whenever we buy, and whenever I let's say I sell the stock, and then I thought, I'm going to be smart because I'm going to be selling today at the peak and it's going to be dropping, and then I'll buy back again. And guess what? This guy just keep going. Sounds familiar, right? The thing is, when we buy and sell, we always think that we are that smart. So, from what I've experienced, it seems that this quote, sometimes I do look at it and think about, okay, maybe that's why I shouldn't be touching. I shouldn't be making a move because I bought these current stocks that I have based on a mid to long term horizon. Okay, because likely the more I move, I find that the more stupid mistakes I tend to make. So I try not to move them. Okay. On the other hand, we got pretty nice profits over here for some of these real estate developments. You can see this guy bought around this period, and some of them sold in like 4 years, 5 years, 6 years holding period, and then they make these kind of gains. Okay, imagine within 5 years you make this kind of gain. Basically, you are getting about 100 plus gain year per year. That's like 100K a year. That's like 8 to 9K a month, just from property investment. Okay, and then this guy over here made 800 plus K. Holding period, I think, is around about probably about 6 years. Okay, bought in 2015, and then yeah, just slightly over 6 years, so maybe 6.5 around there. Okay, no, maybe 6 years, 6 years 10 months around there lah, and then make this kind of money. Can you imagine making this kind of money in 6 years? That's probably like 120, 140K. And then basically you are just putting in the money, and then you're ripping. But at the end of the day, yes, the ROI may not be as high, because if you take a look at this, annualized is only 6%. But I think, to be fair, the ROI is that usually we put in only 25% down payment. So you probably take this and then you times 4, which will give you 20+% per annum. Okay, that's average lah. Of course, if you factor in the causes, maybe it's 20% per annum, which is pretty decent. Okay, but then again, life is not always that rosy, because I want to be fair, right? I mean, I'm not trying to show you that every single one of you who are going to be investing in real estate, you're confirm going to bring big money, because life is always not that rosy. So this is the same development. This is the one development that has both quite a number of profitable and unprofitable transactions. And you can see there are some guys who make really quite big hefty losses, 600+K worth of loss. And then there's also this guy who made 600+K worth of loss. So you can see the top figure is actually quite similar to the top profitable figure. So how can we understand and learn about the market such that we try to put ourselves in this situation as compared to those who put in this situation? And for your info, this is a development that is so-called, probably, if I tell you about a location, you confirm will love the location. Okay, or rather, most people will love the location because it's convenient. But the thing is, if that's the case, then why are these people facing this kind of loss? And why are these people able to make a profit despite both of them being in the same development? Okay, that is where the challenge lies in. How are you able to identify? And if you're not able to identify, you're not able to understand the market deep enough, and how are you going to do it? How are you going to get a professional help that you need to get to do this? So at the end of the day, I think it's going to be very clear that if you do know how to play stocks, if you do know how to when to identify what is the right time to buy, when is the right time to exit, then I think we can all agree that, of course, stocks will have a very high ROI as compared to real estate, because first of all, to enter real estate, your entry quantum is already much higher. But in terms of, if you take a look at this kind of returns, when it comes to absolute returns, I think definitely real estate in most cases will have much higher absolute returns. Why? Because given a 500K, let's say, a 500K capital, how many of us will put a whole 500K into a Tesla? Or maybe a Dogecoin? Or maybe a Bitcoin? Right? How many of us will put that? But then when it comes to buying a condo that you feel is fundamentally sound, you feel that it's safe to enter, will you put that 500K? Okay, I would say definitely I'll put that 500K, because I bought an investment property. I put roughly the figure overall in. So I already done that. But the thing is, I can tell you for sure, I wouldn't put a full 500K in the stock that I am confident in. Yes, I may be confident. I'll maybe put if I'm really, really, really confident, I'll put maybe 20K, 30K, because maybe I do not understand the stock deep enough to put that much money. But maybe I do have maybe some false sense of confidence for me to somehow still put 20, 30K. But I won't put all my money in, because I'm not going to put all my eggs in one basket over there if I don't really understand that, if I don't really understand the downside risk. Okay, whereas for the property market in Singapore, I think it's very clear that there is very limited downside risk for most developments, because of the cooling measures that the government has in place, which is all has been implemented for the sake of preventing another big crash. As we all know, when we have a very big crash, basically families get wrecked. So I think the government doesn't want that kind of situation to happen. And this is an article that just came out like yesterday. The day trader, or rather one bunch of day trader guys are losing all the money that they made. Okay? Because there's a lot of people who entered into 2020. In fact, I have a good friend, a really good friend, entered in 2020, bought some stocks, and had a much higher ROI than me there. And then to him, he's like, Aya, Didi, actually, I realized I'm just going to rent a house that I want to, and then I'm not going to, I think I don't want to buy a house. And I say, why? Because they say, oh, yeah, I might as well put my money into stocks and crypto, because can make more. You see, wow, now I'm like 100+% up already. And then he just started in 2020, just started buying his first piece of stock in 2020. And then he's telling me this because I think second half of 2021, he's making more than 100%. And then of course he's happy, he's confident, he's getting a little bit arrogant, and he was like, no man, I think I'm not gonna put my money inside real estate. And guess what? For those of you who has been still monitoring the market in 2022, you realize that a lot of these stocks are becoming red and quite deeply red. And guess what? This good friend recently just came to me, telling me, hey, you know what? I think I'm considering buying real estate already. He didn't tell me exactly the reason why, but I think I pretty much guessed it because quite a lot of my friends who do stocks, they're all complaining that they haven't been doing their portfolio hasn't been doing well. In fact, a lot of them are quite a bit in the red from year to date. So yeah, that's probably why he wanted to suddenly come into real estate, because he probably knew that there's too much volatility and downside that is comfortable in, that is definitely, and which is not definitely comfortable enough for him, and that's why he want to put. I don't know, maybe that's the case. I have no idea. I didn't want to really ask. And then you see, so these are the typical, my girlfriend is pretty typical, some of these amateurs who jump in, and then they see all these gains because of GameStop, Tesla, AMC, all these kind of things. And then they started trading around the COVID period, and then that was when the Federal Reserve keep printing out money, and then the interest rate was low some more, and hence it was easy for a lot of companies to go to the moon. And then recently Federal Reserve just decided, they're gonna hike rates for quite a bit, and hence the market is getting a little bit bearish, and we all know what happened in the market. So if today we're given a choice of $800,000, how many of you will put in stocks? And how many of you will put in our local real estate? Okay, I'm not saying that real estate it won't go down. It did in 2013 when TDR was really introduced, and this specific property came down 13% to the absolute peak, the absolute bottom. And then from the absolute bottom to where it is now, it has gained 35% within a span of 2016 to 2012, 2022. That's a span of 6 years. Okay, that's like 5% per annum. But then again, if you notice, if this is like 1250 PSF, for example, okay, 1240 PSF to 16 plus, and if you got 1,000 square feet unit, you would have gotten maybe 400K gain in your equity. And then the best part is you have been staying in the property, and you have stayed there rent free, and you still got a gain of 400K. So isn't that good, right? But definitely not all are them. Disclaimer again, I'm not saying that all properties are like this. I'm not trying to be an overly optimistic bull here, because some of you may think that TD just trying to sell you property, that kind of thing. I'm not saying that. If those of you who have been watching my video, I'm not that kind of crazy bull. So, but anyway, haters gonna hate. So whatever you want to think, I think my intentions are clear already here. For and by the way, this is one interesting stock. Why? Because I have one client at that time. Alibaba was somewhere around here, I think. Yeah, I think I saw his place somewhere around here. And then he was telling me, hey, you want to buy Alibaba or not? I think Alibaba undervalued it, drop. And the time that he told me about Alibaba was a few months after the sale. And then he was saying, hey, buy here, buy here. I didn't really have a comfortable feeling about that. Oh, by the way, he's not a pro investor. He's more like a recre investor, lah, for those who were wondering. And then he did tell me, you should buy Alibaba here now. But I was like, at that point of time, my cash flow was quite tight, lah, because I just pump quite a lot of my money into the investment property. And then I was thinking, probably not, because I also didn't really had a good feeling about this Alibaba because of all the news in China, we all know. And then guess what? Today, if I heeded his advice, I put in maybe, let's say, 20K. And what would have happened to my portfolio? I would have been down by more than $10,000. So, was it something that I would have stomach? Maybe, but I would definitely feel very sad when I look at my portfolio when if it's down like for like more than 50%. Okay, so I'm not trying to say that, hey, today if you have 200, 800K you put everything into here. I'm not saying that. What I'm saying is it really depends on your expertise. If you are going to be looking for something that is more stable, then probably you may want to consider putting a much higher proportion of this amount into real estate, and probably definitely you have to put into something that is fundamentally stronger, fundamentally more sound, as compared to something that, common here say, must be near this, must be near that, or must be freehold, or must be this and that. So you need to know what are you going to be putting your money in. You don't. I'm not expecting you to know every single thing of the market, but at least educate yourself enough so that you know how to recognize the good opportunities. But on the other hand, let's say 800K, maybe I carve out 650K, maybe I carve out 700K, I put inside real estate. The remaining 100 to 150K, maybe I'll put somewhere in some other stocks. I'm not saying put into Alibaba, but I'll probably put into some other stocks. Because I want to diversify a little bit. I want to maintain there is something that is probably a little bit more liquid, and I will put a smaller proportion because I feel that my expertise in the stock market is probably not as strong. So it really depends, I feel, on your comfort level. How confident are you that you can gain more in the stock market? Okay, and then these are some of the guys that you know already. They are, for example, co-founder of Secret Lab guy, 4 CEOs of big shots, young big shots of certain companies, tech companies or what. They have been suddenly snapping up good class bungalows, the peak form of property for the local market. They've been snapping up somewhere in the middle of last year. Okay, and then this one only just came out last month. GCB at Olive Road sold to Wudays Tycoon last time. Okay, the grandson. And why are these guys? These guys are obviously not stupid. If they can fork out $50 million, they are not going to be an average guy who are, so probably some crazy guy who just happen to have too much money. They're probably definitely not going to be that dumb. They're probably having their own fair share of professional advisors. They are advising them on what to do, and then they are probably not so stupid to, my advisor tell me to buy, I buy. They probably did their homework, and then also to capitalize on the opportunity. And these are the guys that I'm pretty sure these guys are already sitting on capital gain already from last year to now. Okay, so why are they putting into the real estate? Because these guys have businesses to run, right? But why are they putting in so much money into certain real estate? I think it's quite obvious. So I think to compare real estate and stocks, I think this one is a very simple comparison. Pretty much you use it as a hedge. Okay, but of course not all are like this, please remember. And then stocks, we like stocks because it's easier to liquid. Okay, of course you might need to buy into something that's higher volume so that it's highly easier for you to sell, which is like a same goes for same goes for condos You need something that has probably higher value so that it's easy, higher volume so that it's easier to sell also. And then the other thing is that real estate requires a lot of work and money out of pocket, whereas stocks has quite a lot of skills that is involved and the returns can fluctuate quite a lot. Like what I mentioned, I think 50 to 20% for me 2 days back, and then now I'm swimming under 10% gain. When it comes to real estate, please, I recently seen quite some inquiries or telling me, oh, today this is my budget. My budget is like, by the way, I'm pretty sure they can afford more. It's just that they self-impose this budget because they probably haven't really studied the market to really know what is realistic and what is not realistic. So the common expectation will be like, okay, since I'm going to be putting in $1 million, I want this to be a good location, and I want it to be something that has value, and it has to be cheap enough to fit my budget. And unfortunately, we all know that this formula, all three together, it does not exist, especially in the bull market. Because if you do not know how to recognize the opportunity, by the time I see this, I like that. Okay, maybe 1 month later, I decided I turn back already. Guess what? The unit is definitely gone because everyone has been watching the market. There are a lot of people that I know watching the market like a hawk. And hence, when they see opportunities, they go in, they go for the cube. Where there is no time for people who, maybe I see I see, okay, this is an opportunity. 1 2 months later, I come back and see. I think this is something that is probably not realistic at all. So probably you want something that is good and cheap. Is there value for this? If you want something that is good value, that has good value and has a good location, is it going to be cheap? So if you want something that has value and yet cheap, is it going to be a good location? I think we have to decide what is the combination that is comfortable for us. Okay. And like I said, this bull market, and if you do find something that is really like this, please don't wait already. Just go for it. What are you waiting for? But the problem is this is very, very, very difficult spot. So verdict, I think to sum up the topic for today, stocks and crypto, they are good investments if you really know how to play them. And if you really have the expertise and you are really confident in your ability, then please go ahead, put in more of your money inside. But if you're like me, and we are not too confident about our skills in the stock market. We are not too confident really regarding our emotional discipline, whether we see the right time to let go. Are we able to let go? Like for example, I recently seen one of my stocks went over 100%. I was very tempted to, very, very tempting for me to let it go because it's already exceeded my expectation that, I didn't expect this stock to exceed 100% again that fast. And because I didn't sell it that time, I think that time it was selling about 110, 120%. Today, because they didn't sell it, just now I just saw it, the gain dropped to 70+%. So obviously I'm not good at exiting when it comes to stock market, but I'm still holding on to it. Okay. Whereas I know that the real estate market in Singapore is riding on a momentum up, definitely controlled by the government as compared to how it was. But as long as I do my due diligence to make sure that I cover all my blind spots as much as possible, then I don't see why I wouldn't throw 500K, I wouldn't throw 600K, I wouldn't even throw $1 million down for down payment when it comes to real estate. But I definitely, for sure, I wouldn't throw anything more than 200K into stocks at this point of my understanding of the stock market. Okay, so it really boils down to this word, expertise, or rather your confidence. Okay, and please do not, for those of you who started investing more in 2020, please do not assume that every year will be like your 2020 to 2021. I think that's the danger point, because I've been playing stocks since like 2011 during my army days. Made some money, lost quite a lot of money. And then I've over the years I've been monitoring on off. And then you realize that this year, this 2021 was a particular good year for stocks. It was an awesome year for many stocks. If you do enter somewhere in between March to April 2020, when COVID was really just started really. But unfortunately, not every time is like this. So please do not assume that your ROI is going to be as high like this. If you do make at least like 10, 20 times for Tesla, please be, I think you're already far ahead. But is it going to be going that much higher within a certain time period? Maybe it will go up. I don't know. I never really studied Tesla. I am not vested in Tesla. So I don't think I have the right to talk too much about it. Okay. So like I said, I think it's about finding the right balance. How much are you going to be putting into stocks? How much are you going to be putting into real estate? It really depends on your expertise, whether are you going to be this or this. Please don't put money in your, to put too much money in your bank. Okay, I think that's probably the worst choice. I would rather even put money in my CPF some more. Okay. And then one more market update before we wrap up the day. I think this just came in the day before 11:30 or 11:45 p.m. and which caught quite a lot of people by surprise, which I think is a trend now. When government wants to cool the market, they're obviously not going to be throwing it to you, right? If not, people are going to be queuing non-stop to at the show flats to take advantage of the cooling measure, right? So I think this cooling measure, this is a mini cooling measure, by the way, came because of Piccadilly Grant, likely because nobody knows for sure, but I think it's very likely. Sometimes when a launch is too successful and the PSF is not cheap, what happens? It pulls up your PPI. And these are going to be going high. And guess who is watching? Our government. And hence, this happened, which is totally not surprising. Okay, so what we need to know is that generally almost all, or rather all the purchases with trust will be slapped with 35%. Even if I buy foreigner, it's 30%. Even if I buy second property, it's 70%. But now 35%, this is like the highest percentage so far among all the tiers. And this on trust, because we do have quite a lot of wealthy parents buying properties under trust, because that was one of the ways that we can buy something without ABSD, but now they're trying to cover this loophole. And if whether you are able to get a remission of the ABSD really depends on whether you fulfill certain conditions. So if you want to know more about this, I'm not going to be talking too much about this. If you want to know more about this, go to IRA's website and then go try to understand it a little bit more. But the main thing I want to bring up is, what is the government's intention? Is it to crash the market because they feel that it's overheated, or are they just trying to stabilize the price growth? And this being a rather, I would say, a minor cooling measure, because this, how many people are buying under trust, I think is, yes, there are quite some people buying under trust, but it's not too big a proportion of buyers. Most of the buyers are still first-time buyers, because second-time buyers, second property buyers already another 17%. So as such, I believe the government's intention is to stabilize the real estate market instead of crashing the market, because I'm very sure they know for sure that if they want to crash the market, they can easily adjust TDSR from 55% drop further, 60% that time drop just recently dropped to 55%. They can just easily drop this to 40%, and I can tell you the market confirm drop. But this is not their intention. Their intention is to stabilize the market. Okay, because they sense that obviously the market is hitting up, but they do not want to crash it. They want to stabilize it. And hence you notice their movements, they are coming in with not too heavy cooling measures, not something that will hurt the first time buyers, but it will hurt something they will hurt those with multiple properties. Okay, so and then the one last thing I need I feel like I should share, because I just had one viewer who asked me, or if I buy from the other agent, then actually not much difference, but the thing is, will you be able to pick somebody who's able to help you exit at the right time? So for example, this development, which is the same stack. Okay, so these guys exited at 2019, made this kind of money, and then just one floor lower, only about 3 years later, these guys made 338K, 338K more than these two guys who exited. And these two guys are on a higher floor than this guy. And this guy recently is on the quite 9 floors higher than this guy. And guess what? They exited with the difference of $500,000+ lesser. So are you able to pick the right person to help you on a and have a long-term relationship to help you monitor the market well, so that you know when is the better time to exit? Okay, whether, or if not, if your so-called agent is not able to time the market, and then when you ask them when is the best time to sell, they will say 3 years. Why? Because SSD is over, it's time for them to make money again. If they are not able to read the market well, if their interest is not in reading the numbers, not in following the market, but then for more of following where their next pay is gonna be, I think you're probably going down a spiral path. Because look at this. Imagine this guy. I'm very sure that this guy, if he's being advised to hold on for maybe, let's say, how long is this? This is a period of 1 year. If he was able to hold on even for at least half a year longer, I'm very sure he would have made at least something that is much closer to this number. But he didn't. So was he ill-advised? Was he able to sell his house with the best tips, being able to bring out the emotional aspect of the buyer for them to pay more money? I think unfortunately he wasn't in good hands, and the same goes for these two. So definitely they lost out in that sense. So at the end of the day, are you able to find the right person for the job? And then are you just looking for somebody who is you know just here to help you transact one time, or then next time, a few years down the road, you'll be thinking, okay, maybe I feel this guy just basically one-time agent, I'm not going to engage him anymore, I'm just going to find somebody else. And then that somebody else comes in right out of nowhere. What's his first response? Hey, I think you should sell. Why? Because if you don't sell, if he tells you don't sell, then how is it going to be in his interest, right? So I think at the end of the day, we need to look for somebody who you can trust for a long-term relationship, so that he knows that you are taking care of his interests, and hence he is obliged to take care of your interests as well. Okay, so that is all we have to share with you today. Any other things you need my help, then just feel free to DM me or PM me, and then I'll be happy to help. Okay, that's all we have, and then see you guys. Bye bye.